Yeah, I mean, look, it was responsible in terms of 7% headcount cut. I think it's just more the tea leaves that investors are kind of reading into around profitability as you go in 2019. The big focus here is, will they have to raise capital, 1.5 billion of debt coming due? We do not believe that. We think there's only a 35% chance. But ultimately, look, they ripped the Band-Aid off. They needed to do this. It's a knee-jerk reaction, but our thesis has not changed in terms of how we view Tesla over the next 18, 24 months.
Tea leaves, I feel like it's a Rorschach test, Paul. I mean, you can sort of read it the way you want it, either as a CEO who's really just trying to cut costs in a year when they're trying to ramp up production, not just in the United States of the Model 3, but also building out a plant in China. Or you can say it's a sign of desperation that this is a company that's running out of money. How do you read it?
I think it's a sign of normality, actually. I think the headline here is not even Elon Musk can ignore the need to make profits anymore. I mean, look, last year, job one was getting the Model 3 production up to a meaningful level. Now, job one this year is keeping that meaningful level while also posting profits. If they hired too many people last year, they're trimming back some this year. But, so they got to make profits. Now, the issue really then becomes, can they really make this and sell it at a mid-price point? There's no successful EV on the market today that's a mid-price vehicle. There just isn't. And in fact, General Motors just took EVs away from Chevrolet and said, we're going to put them with Cadillac because the Cadillac price points, they believe, will accept it more.
So that was really critical in what he said. He was cutting these jobs in part because he said, we've got to make these cars cheaper. Right, Paul?
Yeah, exactly. I mean, that's it. The Model 3, the initial goal was to sell it at a base price of about $35,000, and then you get some government incentives, which are now, by the way, being reduced as planned. But the typical price for a Model 3 is about $55,000. That is not a mid-priced vehicle.
Dan, to Paul's point, and as we just saw with Cadillac being the brand they're going to go electric for GM, Dan, should Tesla just say, we're not going to try to get the price point of this lower? Would investors be fine with them saying it is a $50,000 or a $60,000 mass market car?
No, I mean, to the contrary. I mean, investors need to see success on the 35K and mid-range in terms of that 42 to 44K, because that's sort of the masses in terms of from a consumer demand, especially in the U.S.
But my point, Dan, and I should have said it more clearly, is would it be better for Tesla to take a higher price point with fewer vehicles sold than to spend all of this effort trying to get that price point way down to sell more units?
Yeah, we believe that would be the wrong decision, because also from a profitability perspective, if you look ahead, that's where ultimately they'd really be in a fork in the road situation in terms of needing to raise capital. I think right now they need to focus on that mid-range. That's what, look, the bull thesis, and part of our bull thesis is that mid-range is successful, specifically in the U.S., and then Europe comes on the high end this quarter. But I think right now that's why investors are a little white knuckles here on Tesla, just given what you saw in the email blog post.